Good morning. It's 8:16 local time, Hawaiian time. We're on the Big Island here. Behind me is the Bay of Hapuna, which I think I'm going to snorkel in after I record this. This is our last day, 5 days on the Big Island. We came from Kauai, which is, I never know if you call it Kauai or Kauai, but the correct pronunciation in Hawaiian is Kauai, where we stayed for 8 days. That was one of my favorite places in the world, and I didn't want to leave. And we changed our trip to go back there and end there. Having said that, the Big Island has been very nearly its equal. Different landscape, uh, beautiful resorts, beautiful mountains. The mountains here are much taller. There's active volcanoes. Got a video of Kilauea erupting. We went up to Mauna Kea to an observatory to watch the stars. Snorkeled with manta rays, I believe, maybe manta rays. I have to look that up. So it's just been terrific, and it's gotten me away from the volatility of the markets, which has been good. Although that is opportunistic too. I see that oil has ramped up really the last 2 weeks or so. You're starting to see we've had an increasing correction in the tech complex, and some of the photonic stocks had really corrected. Names that we had some participation in at one point, XTI, that we got out of, and it ran much further than we ever thought. It's come back in a lot. So some of the hot momentum stocks have really corrected. And last night, it was interesting because Google reported, and they actually increased their capex another 15 billion or so for 2026. I think they're looking at spending roughly $205 billion in capex spending, which is an extraordinary number here in 2026. Yet the market reaction to that was negative. And similarly, Tesla reported they are also spending capex, nowhere near at the pace that Google is spending them, or Alphabet. And the market reaction to Tesla's results were also negative. This is on the back of, we've got a correction in SpaceX. SpaceX got to 225 or so, I believe, pre-market at its highs. It's almost in half from that here at its lows. So there's been a decided risk off environment in the tech complex, even though the capital spending spree is continuing. So the market is uh, casting its doubts, or at least saying that, hey, this isn't going to be just a one way trade. And it made me think that the market in April, May, June, especially for the tech stocks, was a right tail market. Where the options market didn't have priced in the upside moves that we were seeing. It's now increasingly a left tail market, not to the same magnitude or degree. However, the reaction has been to sell the news, no matter how good it's been for the tech stocks. So that's something to keep our eyes on. Then, additionally, you're seeing some rotation. Obviously, the energy names have started to perk back up. Interestingly, though, names like Transocean, Rig, and BORR are still quite a bit off their highs, earlier in the year. And then last night we also saw Cleveland Cliffs report, and I've been saying repeatedly in my notes and my observations that steel prices have been remarkably strong, up 50% or so for rolled coiled steel from the September levels. They've held near their highs, and you're starting to see the result of that, where Cleveland Cliffs, they beat on earnings and cash flow guidance. In fact, they guided free cash flow generation and just operational cash flow to the best levels in for the second half of 26 since 2021. I remember that's when Cleveland Cliffs went over 30. It's a much bigger company now with some of the acquisitions they've made. But you're seeing a turn there. And adding to that, the economy has been much stronger under the surface. If you look at claims numbers, there's just a real strength in the underlying economy. And you haven't really seen that in some of the cyclical names and or the economically sensitive names. So I think we're, with the weakness in particularly in tech stocks, semiconductors, the last 30 days or so, people. I saw a Bank of America poll that said that investor positioning in semiconductors was the most bullish of any sector that there's ever been. So here in June and July of 2026. So as we go into earnings and those expectations are heightened, obviously the options market's adjusted. It's not a free lunch anymore just to go in and buy calls. And in fact, it's working the other way, so far for the tech complex. So what's happening is, as the capital that was built up by folks that were doing that, as that gets challenged, people on the momentum side are looking for things that show relative strength. So it'll be interesting here to see if names that are higher free cash flow yielding names that we've been targeting start to show relative strength, and then they attract some of the fund flows. So that's to be determined here. I think we're only at really the beginning phase of earnings season, so it's to be determined. But so far, what we've seen, the sell the news in tech, regardless of the results, and then the bar was high there, whereas now the bar is low for some of the higher free cash flow yielding companies that we target. So I want to see how they react. Cleveland Cliffs was a good start. Looking to see what Peabody does. EQT was also a good reaction by the market, and then you're seeing on the natural gas side, there's been some talk. This seems like every couple of years somebody comes out with a bullish macro thesis on natural gas. There's been another one by this Matthew Smith, and I encourage everybody to read that piece. I've been doing, those E&P updates annually for a number of years now. I don't think there's anybody else that does that catalogs the companies and looking at the natural gas and energy complex. I've been bullish on natural gas for a long time, and it's been frustrating in a way because you've seen things like, the G Vernova or Bloom Energy, which people are questioning now because there's don't know how long those fuel cells last, and they also need scandium, as an input, and it's being supply chained through China, and they denied that. So there's some, as my kids would say, sus things going on. But those entities in the independent power providers have been the ones that have really benefited from the electricity generation, the data center build out. So it would be nice to see that investor interest transition to some of the natural gas equities that we target. Their balance sheets in general are really good. I have listed the ones that I like, in my order, and the reasons why. And I think unless you've studied it for a long time, you don't know the nuances. For example, Range Resources has a really good inventory of drilling locations, but they've sold 4 royalty tranches that, if you don't follow it over the years, you're just not aware of that. Still a great company, in my opinion, for this environment, but you have to know the nuances of each individual company. So I am going to try to do these updates on a more regular basis. I want to do one from Kauai. It just, we got busy. We surfed, we explored, we hiked, we went to waterfalls, went on boats, went into the mountains. The days flew by. It was great. I didn't want to leave. I don't want to leave. I don't want to leave the Big Island right now. But we're leaving today, and I'll let you know our next stop and how we like that. But I couldn't imagine, that we would like the next stop as much as the prior two. That's a good thing, though, for a lot of reasons. So checking in. Hopefully everybody is having a good month of July. You're getting ready for the back to school season. We've got back to college here and back to, regular school. That's coming up right around the corner, and, time flies by. So enjoy life, get out there and live it. Tell the ones you love that you love them, enjoy your family, and, do the things while you can, whatever you can do, because, before you know it, 1, 3, 5, 7 years pass, and time just flies by. So that's my philosophical thing for the day. Easy to be reflective, in a place like this. If you've never been to the Hawaiian Islands, which I had never been, I encourage everybody to go when you can. And there's something for everyone to do. Whether you're a nature lover, you love the ocean, if you like to surf, if you like to be physically active, hike, there's nice resorts, there's nice restaurants. It's just a fantastic place. So, a couple things. Kauai, 73,000 residents, like 1.4 million visitors. On the Big Island, it's like 210,000 residents. Similar mix, both of on Kauai. I think the Asian population is 31%, whites like 30%, Native Islander is somewhere around 10%. Hispanics are in there too. Then mixed races here, kind of similar. I think whites like 30, descendant, European descendants like 30%, Asians 27. It's interesting when you talk to people on the islands. A lot of people, they've never left the island. That's all they know. But so 210,000 people. I think the visitors are like 2.4 million. It's a much bigger island in terms of it's the third biggest island in Polynesia, behind the two New Zealand islands. It's an active volcano park. There is just there's a lot more land, but still relatively sparsely populated compared to Maui, and especially compared to Oahu. So that's my geographical tidbit or fact for the day. Take care. Enjoy the day. Thursday, July 23rd. See ya.